Hello everyone, welcome back to another episode of Palisade Radio. Today we bring back on the New York Times bestseller and head of Katusa Research, Marin Katusa. One quick announcement. Last week we announced we would give away 100 free copies of David Skarika's book, Collapse. We've now upped that to 300 and they're all gone, so we've decided to leave the giveaway up until Wednesday, June 10th. Just visit palisaderadio.com and enter your email address at the top to receive a free digital copy of Collapse. Marin, welcome to the show.
My pleasure.
You know, I've had a lot of subscribers asking about your recent departure from KC Research. KC was either merged or picked up by Stansberry, and I understand from a public announcement that you're going to be going your own way and starting your own research arm. What can you tell our subscribers about what's going on your end?
Well, not much has changed in my world. I'm still doing what I'm doing, focusing on the best private placements and opportunities to make money in the junior resource sector, both mining and energy. So what happened was, I'm still very close with Doug, and I've heard all sorts of rumors about me and Porter. Me and Porter are good buddies. He's actually an investor in my hedge fund. He's a very happy investor. He's made a lot of money with me. I used it as an opportunity, really. When I look at my investment cash flows, the newsletters were great. I loved working with KC Research. All of the team were great guys. Behind the scenes, there's a lot of great people. But it's a very small percentage of my cash flow. It's a very small percentage of the money I make. I make over 90% of my money from my investments. And what I realized was, with all the changes going on, and Porter and I had a big discussion, and Doug, and I got to give Doug credit. Doug Casey has been a great mentor and friend, and Doug did everything in his power to get me to come over. And we just kind of sat down and thought, you know what? I want to get to the next level on the investments and my funds, and now's the opportunity for this. And that's what I'm focusing on. My funds have done very well in this market. We beat the indexes, and we've got over 50% cash in the funds. And that's where I'm really going to focus. And a lot of people are wondering why I'm providing all my research for free. And the answer is this simple: deal flow. I'm one of the, most well-known newsletter writers in the resource sector. And if I stop doing the research, the investment bankers and the brokers may forget about me if there's a major deal out there. And by having for example, today, the #1 Seeking Alpha article is the one I wrote. By being out there in public, in the room, in the deal, in people's mind and in people's image, I just want deal flow, and I want to have the best deal flow in the world. And part of that is putting out my research. And, I have over 33,000 subscribers already. It's all free. And there's no secret that my research is some of the best in the industry. So if you like it, great. You haven't paid for it, so there's nothing to complain about. And I just want deal flow. So this is an open call to all the investment bankers and the brokers. If you have a great idea and you know about a deal that I don't, please bring it to my office here in downtown Vancouver. And we are one of the largest funds in the sector with cash looking to deploy with the best structure in private placements. That's my focus.
Marin, what is the setup of your fund? A lot of our subscribers hear how successful it is. Is this a fund that was opened and closed, or is there a way for other people to participate at this point?
Right now, there's no way for people to participate because we're not opening them up to new investors because of our cash positions. So the first one was the CORF, which was very successful. We paid out all the money, and then we shut it down because I had 3 other funds. Myself and Doug Casey are the largest investors in the fund. And, that's just to demonstrate the relationship that I have with Doug. He's still a big shareholder in my fund. We talk almost daily, depending on either of our traveling schedule. Doug still travels like he's a 25-year-old. The man is a hardworking person. And also Olivier Garay, even though Olivier and David split from Doug in the ownership, I'm still close with both guys. And Doug and Olivier and David are involved in the funds, and we're all big shareholders, as is Rick Rule, who's a shareholder. It's the only thing he does outside of the funds. And to the 2009 partnership, because of the success of it, all the shareholders wanted to roll it over. That got extended by another 5 years. And then we have the KCR Fund, which is a 2010 partnership, which is in a venture with Rick Rule. And then I have my 2011 partnership, which is called the letters KCO. Now, people call the funds the KC funds, which is technically correct, but the reason why I called it the KC is respect to Doug, but they're actually structured as the letter K, my last name Katusa, and then Doug's last name, Casey, with the C. And I thought it was a very clever way of paying tribute to both of us, but it's still called KC. So it was just sweet irony there. And that's where the funds are. So we've got another 3 years on the funds, and then I'll be structuring up my new funds at that point.
I think a lot of people would be interested to know where you're putting your money right now. I understand you're 50% in cash, but you've managed to be successful in a market that most people are losing money in. So looking today, what commodity, what are you focused most heavily on in looking at investments?
Well, value. I don't pick just one single sector. I use the Altera example with Ross Beatty. I remember at a Casey conference in 2009 when I was the moderator of the panel. I had Lucas Lundeen, Doug Casey, Rick Rule, and Ross Beatty on the panel. We were talking about the green energy revolution at the time. So Ram Power, which Rick was a big shareholder of, it was trading over $4 a share at the time. And Ross's company, Magma Energy, was over $2 at the time. I think it was like $2.25 or something like that. Anyways, they were talking about all the potential, and they were very correct at the time. There's great potential in these projects. Someone in the audience, and this is videotaped and recorded in the archives of the conferences at Casey, so it's out there. Someone in the audience said, well, Marin, you're the mathematician of the group. What's your opinion of these? And I said publicly, look, these guys are worth 0 or 2 more than me, so take it with a grain of salt. But at the same time, I'm not scared of throwing punches. So I don't think you need to rush into any of these deals. I think they're going to go down at least 50% in the next 6, 12, 18 months. I don't know when, but it's based on cash flows. And, I fast forward now 6 years later, and you take something like Altera, which was Ross's Magma Energy, which merged, basically took over Plutonic Power. They have over $1 billion of capital has gone into these projects. 6 years later, they're free cash flow, and you can buy it for 15 cents on the dollar. And that's what I have done. I've built up, after being to the projects and spending considerable time with Ross and John Carson, the president, I've created cash flow models against all the peers. And I think I'm like the 3rd or 4th largest shareholder now of Altera. And this is a stock that everybody in the world was talking about in the green energy world 6 years ago. And today, nobody's talking about it. And now it's 10 times the company it was 6 years ago. And that's the type of things that I'm doing. I put 10% of my fund and my personal investment trust into Altera. I think from where my average cost base is somewhere around 33 cents or something like that, I think it's an easy double. Easy. And those are the types of deals. So that's an example of buying in the open market and finding crosses. And then I do private placements with full 5-year warrants. And I back the right management teams with value. And, it sounds easy, but, I don't do too many deals. I have 9 positions in my fund. And after running the funds for, since 2009, that's where I'm at. And you pay a dividend to the shareholders. And as the largest investor, I'm focused on the big scores, which you usually get in private placements.
Marin, you're working with tens of millions of dollars here. If you could put yourself in the shoes of a smaller investor, somebody that's maybe looking to deploy $100,000 in the sector right now, you're huge on private placements. I am too. The value of a warrant in junior resources is very powerful. How does somebody with less leverage, less connections, what do they do to get ahead?
Well, it's like going to a gym. You can't expect to have a super fit body by not putting in the effort. And you have to ask yourself, what type of investor are you? I started with absolutely nothing. I started as a high school math teacher. Then I got into teaching calculus at the university, then the Ministry of Education, marking provincial exams. And then by 2003, I decided I made enough money that I'm going to leave. But I was a young hustler, and I was willing to work crazy hours. So the first thing any investor is willing to to decide is, who are they? What type of investor are they? Are they a true speculator, or are they just a passive investor that likes to fantasize about being a speculator? So that's the first thing. Ask, that 100 grand, is that your retirement fund, or are you a young whippersnapper like yourself who wants to make a big score and is willing to put the time, effort, and stress and sacrifice? So that's another question to answer. If you say, I don't think I want to sacrifice what it takes to be and become what Rick Rule is, or a Doug Casey, or a Marin, it's a lot of sacrifice. Spending 300 days a year on the road, you sacrifice your personal family relationships, your friend relationships, and your friends become basically industry people. The other aspect is, well, maybe they don't want to put that sacrifice. So then you should probably find someone like Rick Rule, or a fund that you want to invest in, and go that route. That's probably the right angle. Don't just think that you can do this passively, or find a newsletter writer that you truly believe, but be very careful with the newsletter writers. I think that if a newsletter writer isn't writing a check himself into an investment, I personally do not invest in management teams where management don't write a stiff check into their own deal. If their skin's not in the game and they don't feel the pain that I'm going to feel, then why should I play? So these are kind of questions people have to ask themselves and figure out. But if you're wanting to be a serious speculator, you nailed it on the head. It's all about the private placements. And with today's technology, it is a lot easier than it was 10 years ago. You can set up for the private placement alerts from the exchange, from the companies. You can get access from different brokerage accounts, different analysts, their research reports. And I think you just got to dig in there and do your research and get to know the people. Everything starts with people. And look, I've made a lot of mistakes, Colin. It's not like I have a perfect track record. I still make mistakes. I'm going to make a lot more mistakes. There's a lot of things I don't know. But when I figure out where I'm stuck on a project, what I have built over the last 15 years is, okay, I know who the best epithermal type of geologist for these types of projects is. Within an hour, I can get a hold of him and he'll do the due diligence for me. So 100 grand in this market is the equivalent, I would say, of $2 million 5 years ago when it comes to the relative valuations. So don't underestimate what $100,000 in today's market could do for you in the next 5 to 10 years. I truly believe that if you play it right, 100 grand will net you, after all fees, $2 million if you play it right in the next 5 to 10 years.
You've been gaining a lot of notoriety since your book became a New York Times bestseller, and I've even heard people referring to you as kind of the next Doug Casey in the sector. And people are starting to get more interested. What is Marin's background? How did he meet Doug? Can you give us a little bit? I know you were a math teacher, and that's evolved into the position you're at now, but can you talk about, kind of meeting Doug and getting interested in the resource sector and how it all happened?
Sure. So, first of all, it's a great honor to be compared to a guy like Doug, but I see myself more as a hybrid between Doug and Rick Rule. Those are the two guys that I've spent probably the most time with in the last 10 years in my career. And I've always thought that Doug is brilliant in certain aspects, and then Rick is absolutely brilliant in other aspects. And what I've tried to do is take both of their strengths and learn from it, and kind of evolve myself towards the hybrid of, Doug Rule, if I could call it. So that's to start with. But basically, I started out as, born and raised in Vancouver, immigrant parents, knew nothing about the stock market, knew nobody in the stock market, but, I just knew that I wanted to do more than teaching. Not that I didn't love teaching, I didn't love the paycheck. And by 23, after going through the CFA program and the IFA and having a couple of degrees in math, I knew that there was more to me than just, after my first year of teaching, I was already department head, and I realized that, wow, there's not much more after this unless you want to become a principal, which I didn't really want to do. So what had happened was I started really getting interested in tungsten. And in 2003, I started publishing a lot of tungsten reports. And I met a guy named Jim Robertson, who was running a company at the time called PMI, Primary Metals. PMI was the ticker symbol on it. And at that time, there weren't many analysts that were savvy with the internet. So I met James, who became a good friend afterwards, and he asked me if I can compile a lot of the data. And because of a lot of students I was teaching at university math were Asian, specifically Chinese, I asked them to do a lot of transcribing for me from Mandarin into English, and that's how I got a lot of data from the Chinese markets on tungsten. And Primary Metals was a 15-cent financing with 25-cent warrants that went to $6 within 18 months. So by '04, and I literally took a $170,000 line of credit on my house to invest in 3 tungsten deals, and they did very, very well. Left teaching, then I got into uranium really early, and that's when I first met Rick Rule. I knew Rick before I knew Doug. Actually, I knew Doug's brother-in-law before I did Doug. Paul Van Eden, who used to write for Doug Casey, contacted me because he wrote a report in '04 about uranium, and he had a bunch of errors in it, so I rewrote it and sent it back to him. And he's like, "Man, who are you? How do you know how to do this?" I go, "I'm just a math teacher, and I'm more focused on the number side." And he wanted to meet me, and because of my email, because I was teaching calculus at the university, he thought I was going to be this old mathematician with a beard. When we met one night in Vancouver, I showed up in my jeans, sneakers, and a t-shirt. And I guess Paul was taken aback by my age at the time and my excitement, and we started talking and working together, and he said, "You should meet my brother-in-law." And about a year later, I met Doug because we kept running into each other on these private placements, and Doug wanted me to come on a site tour with him, but I was already starting companies and getting into staking land and flipping properties and just doing things to make money. And then basically at that point, I guess we're talking now in '06, yeah, but almost a decade ago, Doug and David Galland wanted me to come work with them, but I wasn't too interested in being a writer because I didn't even know what the newsletter world was back then. And they said, "No, you're not going to have to write. We just want your investment ideas. We want your analytical skills." So I said, "Great." And it evolved slowly into the funds together and writing a book, and it just kind of happened. And my favorite part of it all is, even though I've left Casey, I'm on good terms with everyone there. Whether it's Louis, we were together on Sunday. Whether it's Doug, I spoke to him yesterday. Whether it's Olivier and David, when you part ways, it was a business decision because I see such a big opportunity here. And it was a great 10 years of my life working with those guys, and I've learned a great amount of material. And we're still investing together. So nothing really has changed in my world other than I publish under my own name, and I don't have to deal with the whole Casey Research had a very incredible back room of proofing and editing and all that stuff. And it kind of became tedious for me, and they did a great job at it, but I'm more of a let's get this out right away so the subscribers can have the material now. And the proofing and going back, and I don't really care if the title of the chart has a capital or a lowercase letter, and that stuff became really tedious for me. So if there's a proofing error on my website, I apologize in advance, but I'm providing all my research for free. So now people can understand why I'm doing what I'm doing.
Well, thank you for the backstory there. And you mentioned putting some money into a 15-cent placement with that warrant at 25 cents and going to $6. And it's hard in this environment when we've been going down or flat for 4 years, even people who have been in the space. And I'm young, but I saw what happened from 2000 to 2007. It's hard to wrap your head around at this point that those days may and will come back. And things that are staying flat and going down year after year will in fact pop at some point. Do you have some of those same issues as an investor, that you have points where you struggle to remember that those times will come back, or is it all there and you're waiting for that moment and you're investing towards that moment?
Look, I believe in the general premise, but I've taken a very different view. at the October 2011 Casey show, which is videotaped and recorded, I stood up and said, look, we're entering a deflation for resources, and if you don't think that any of these stocks, regardless of who they're run by, whether it's Ross Beatty or Rick Rule or anybody, they have the potential of going down 50% or more. That includes my deals. So, and then again at the Casey conference in San Antonio in 2014, I said the same thing. Oil's going to have a tough go here. Resources, we're still in a deflation for resources. So I take a very different view. I'm not looking at the 4 months plus 1 day on a private placement hold. I don't take the blow out your paper and ride your warrant as fast as you can. I'm taking a very different aspect because, for example, Copper Mountain, which I'm one of the founders and directors of still to this day, I put up a lot of money on that, and I had a 5-year business plan. And when we had this 5-year business plan, we entered the 2008 crisis. It really changed things. So I had to rewrite my 5-year business plan. And, this is a stock where I went on TV. It was trading somewhere around 35 cents. And I was buying a boatload. And I said, look, and on national television, I said, you got to follow the people who are writing checks themselves, not the peanut gallery who are just theoretically talking about stuff. And more importantly, I go, I'm buying, I'm a director, Jim O'Rourke's buying, he's a chairman and president. We have to report. You follow the people running the deals with their own money. And I said, this has the potential of being a 10-bagger. Well, I was wrong. It went up over 20 times in less than 30 months. But I'm still there. And Copper Mountain now, I'm in my 3rd 5-year business plan, and I'm entering the 10th year on the board of the company. So what I'm getting at is it's going to take longer than you expect, and the gains, when they come, are going to come very quickly. And what's going to happen is people are going to rush into the sector because they see that it's taking off. I don't expect it to take off this year or next year. I think it's going to take some time, and that's why I believe in the long life warrants, because I'm investing in, look, in the last 9 months, I've allocated over $15 million into the junior resource sector. But I'm taking a very long life approach. So that's my style, and we'll find out if it works. But, I hear a lot from the people, how much worse can it get? And I remind people that it can get a lot worse. And if you look at the resource shows, hell, the candy convention in town had 5 times more people than the mining show. The restaurant convention had 5 times more people. And in fact, they had a real estate show in town about a month ago, and it had 10 times the people of the mining show. So you start looking at things and you see the IR people are getting laid off, and the geos are getting laid off, and there's less companies, and they're going from mining to marijuana. They're just doing whatever they can to stay alive. There's going to be that washout, but we're not there yet, Colin. And I think that, like you mentioned, what does that person with $100,000 do? Take your time, invest wisely, invest in the right people, and it could take 5 to 10 years, but you will make more money than you can possibly imagine, because it always comes back. Now, it doesn't come back on your schedule or my schedule, but it will. Resources have historically been a cyclical sector, and it'll continue to be a cyclical sector.
I'd be curious, with your background in math, you look at the general equities right now, real estate and the bond markets, and they are all at historically rather high prices. And one of the only things that is cheap right now is the commodities. And a lot of people I talk to say some of the money has to come out of the general equities. There has to be a sell-off before there's enough money to move the commodity sector. Is there any truth to that? Is there any interconnectedness between that?
Well, first off, there is a lot of money on the sidelines. When you mentioned, I was getting a lot of attention because of my book, the one unintended consequence of my book, a very large hedge fund manager in the East Coast in the U.S., his assistant contacted me and asked me, Marin, how much would it come for you to come talk to our group? I said, I don't know. I don't really talk to hedge fund managers. And I've been contacted by all these hedge fund managers that have checked out my track record, and they want to know more because of the book, and they love the book. So I flew out to Tampa on Monday, and I spent basically half a day with about 36 institutional fund managers and analysts going through it, and they have over $2 billion, this one specific, as a contrarian fund looking to invest in resources, specifically sub-billion-dollar market caps. Sub-billion is, in the big scheme of things, those are all juniors, right? Those are high-risk deals if it's sub-$1 billion market cap. So that's just one fund, okay? I know about 10 funds that I'm talking to that are saying, any private placement you do, let us know, but here's our minimum ticket because it moves the scale. So it's almost like a catch-22. There's so much money out there, but for $1 million, they become a reporting issuer in a lot of these juniors, and they don't want to deal with that. And the valuation of the shares are so small. So it becomes such a small part of their fund, but they don't want to get into listing requirements and becoming an over 19% shareholder. So there's like a lot of problems here, and the retail crowd isn't coming in at all right now because of the boomers are more focused on their retirement. So calling our generation, the Generation Xers, are really stuffed with real estate right now. I look at a lot of my peers, and they're real estate rich, but net asset value poor. And until this grind comes through, who's going to buy the junior resources is the question I ask. Where's the money going to come in? Is it just some fund that's going to buy 100 private placements? No. They're billionaire funds because they're smart and they're not stupid, and they're not going to buy every private placement. And they're not going to buy in the open market mindlessly. So the sector has to evolve, our business has to evolve, and I think a lot more companies have to go to heaven or hell, depending on which way you look at it. If you're a shareholder, it's hell, before the sector gets going. So there's a lot of money on the sidelines. There's a lot of debt money on the sidelines. But again, it's going to take some time to work its way into the system.
I'm chuckling a little bit in the background with you calling sub-billion-dollar companies juniors, and what you would call the companies that I'm investing in that are sub-10 and $20 million companies.
The nano caps.
So Marin, do you do any investing in the nano caps, or is it not fit your profile?
No, definitely. Like, I do a lot. That's always historically been my niche. Get into the sub $50 million market caps. When you look at Quadrilla, it's $1 billion company today, but when it started in my office, we valued it at $10 million market cap. Copper Mountain, when we did the first round, we valued it as a $10 million valuation. Today the EV of the company is about $400-500 million. So where you get the biggest bang for your buck, Colin, is exactly what you're doing. Where if you ask Rick Rule and Doug Casey where they made their biggest bangs, where guys like Robert Friedland on Voisey Bay, where a 10-cent stock goes to $100, or Ross Beatty's Lumina group of companies where you start the first financing at 10 cents, and if you held for just 7 or 8 years, you made 64 times your money on the 6 company spinouts. That's going to come back, but the question I have that a lot of people don't ask is, who's going to be the next Ross Beatty? Ross Beatty is 62 years old, and is he going to spend the next 8 years of his life trying to grind it out the way he did 20 years ago? I don't think so. Is Robert Friedland going to spend the next 10 years of his life grinding it out the way he did 30 years ago? Jim O'Rourke, a mining legend, he's 75 years old. So where I focused the last 5 years, Colin, is trying to find the next level of superstars. And that was the genesis of the partnership I had with Rick Rule, because again, Rick Rule's a lot bigger, and he has a big, these big group with the Sprott companies. He can't be the street guy he used to be 30 years ago. So he needs guys like me to run around the world and run through the street and grind these deals and find the next Robert Friedland, find the next Ross Beatty, find the next Lucas Lundin. And that's why I created my list of the next legends, the guys like Amir Nani, Pat DeCapo, Nolan Watson, Marcel DeGroup. These are guys that I'm backing, and I believe in the next 10, 15, 20 years, when we are now in our golden years, Colin, looking back and going, Amir made a 50-cent stock go to $15, or Nolan took a $3 stock to $30. That's where I'm focusing my market on. And the beauty is today we have the double opportunity where guys like Ross Beatty are on sale because of a bear market with Altera, and a guy like Amir Adani or Pat DiCapo or Nolan Watson are on sale too. So it's the best of both worlds for me right now.
We're running a little over our allotted time, so if you need to run, Marin, let me know. But I have a couple other questions since this is such a good conversation I could keep asking here.
Sure.
Okay, I want to focus on uranium. We talked about this a lot in our last couple interviews, and I want to know if you see any significance in Japan potentially restarting the first reactor in July. And as a back end of that question, what is going to be the catalyst at this point? How are we going to see these uranium stocks start to take off?
Sure. So, I got a whole chapter about it in my book, and I've always for years been telling people since Fukushima, we're in an underfeeding market. I was the first guy to publish that in the world, explaining A, what is an underfeeding market, B, be careful, C, any companies who are depleting their reserves, stay away from in an underfeeding market. It makes no sense to me. And, I've only had 2 uranium companies that I've recommended, and both have doubled. The last thing I wrote with KC Research before I left was make sure you buy UEC, and if you really read the last newsletter I wrote, you could kind of sense that I was writing a goodbye letter to everyone. And since that last month's letter came out, UEC was, I don't know, $1.35, somewhere around there, US dollars. And, as of Friday's close, it was $2.99. And I talked about why liquidity is so important. And that one stock has more liquidity than all of its peers combined times 2. So there's a reason why the George Soros is a big shareholder. There's a reason why BlackRock and Li Ka-shing, who is Asia's Warren Buffett, are shareholders of the stock and reporting issuers. So take all those issues into account. What is the significance of Japan? Well, I'm actually leaving tomorrow to Paris, Colin. I've been asked by the World Nuclear Fuels Market to give the keynote talk because I was one of the few guys that both the Western world, the Americans, and the Russians agreed to allow speak at the conference because of my views are very, level-headed, and I'm not pro-American and I'm not pro-Russian. I'm Canadian. So all of these views, I state that it's going to take about 24 to 26 reactors for us to switch out of the underfeeding market. That's going to take another 2 years. But a bigger question that nobody asks, you want an interesting statistic from the American government that nobody talks about, that I'll be talking about at my conference. At $50 uranium, there's only 18 million pounds of reserves in the U.S. that are in permitted mines. What does that mean? That's 5 months of U.S. domestic demand that they could supply from their own reserves at $50. Spot's under $40, so that 18 million is going to be significantly lower. My point here is that we've been in an underfeeding market. We've been in a market where Obama's been dumping DOE sales. We've been in a market where the Russians can increase their production by 5 times at the same cost from the tails because it's an underfeeding, because the SWUs are cheap. And yet, when the rest of the world starts building these reactors, for example, I did an interview with the president of the UAE nuclear company, ENEC, and they've actually built 4 reactors and they're 70% complete. The Chinese have 26 reactors currently under construction, and the first one goes live 2017. So of those, that 26 are being built. My point here is that the Japanese are going to bring on reactors, but it's about the rest of the world. There's 68 reactors currently under construction. On top of that, let's say 20 reactors from Japan come on. So now we're at over 75 reactors that are going to be completed and operating in the next 10 years. Where are they going to get that feed from? And more importantly, in 2014, the U.S. utilities imported 94% of the uranium that they purchased and consumed. There is no other energy commodity that the Americans or the developed world is at risk or as vulnerable. Think about this. 94% of what they purchased and consumed comes from outside their country. Their current reserves at $50 uranium, which is 20% higher than where it's trading today, would only last 5 months. Tell me, Colin, what would happen to the price of oil if that was a similar situation?
Yeah, that's extremely powerful. And being selective, I think, has worked in the resource sector the last few years. You talk about UEC, a company I'm very familiar with. But looking at the companies that are developing resources, they're not that liquid. I can think of 10 or 20 of them that have a substantial resource that could one day become a mine. Are you saying that it's going to take these reactors coming online in 2016, 2017 until these companies start getting interest and they start getting a bid back into their market?
Well, you see, there's a time lag. It takes, in my opinion, it takes at least 2 to 3 times longer to permit and build a uranium mine in North America than any other type of, let's say, compared to a copper mine. You know, there's U.S. companies that these assets were drilled out in the 70s and 80s, and there's one specifically in North Dakota that they've been trying to permit since 2007. They spent over $50 million during that time, and they haven't produced a pound of uranium. $50 million to get it to the, bankable feasibility, and yet it should be in production, but it's not going to be for years to come. And they've missed the window where the financiers are willing to take the risk to build the project, to finance the project, right? So you got your EPA issues, you got your state issues, you got your NGO issues. So my question is why would you deplete your reserves in this market if you are a producer? Because you can run around town and tell the bankers you're a producer? Nobody cares because you're not making any money. All of the smart big hedge fund managers that I'm talking to are going, look, we care about liquidity and we want leverage to when the uranium market does take off, which everyone knows it will. It could take 2 or 3 or 4 or 5 years. Nobody knows that question. But you want to be positioned with a company that can flick the switch and is permitted and built and have the maximum leverage too. That's what I've done for my newsletter the last couple of years, and it's why we have the best track record in uranium.
Okay, 2 quick final questions here. Oil, what's going on there? Just macro picture.
It goes back to what I said about a year ago. It's the same thing. It's about international market share, and I remember when my dear friend and mentor Rick and I debated about oil, and I said innovation through necessity. Fracking will get cheaper and they won't decrease production. They'll actually end up stabilizing and increasing production, and we've seen that. Since the collapse of price of oil, I went on CNN with the British dude there, and he was saying Russia's going to fall apart. I said, no way. Russia's going to increase production. Everyone laughed at me. That's exactly what happened. I said that Saudi Arabia would not cut production, but rather increase production. That's what we've seen. Iran is going to be now increasing by 1 million barrels. That's going to hit the international market. So I tweeted a thing about a year ago. One of my favorite spaghetti westerns is The Good, the Bad, and the Ugly, and there's that photo of the 3 guys in the Mexican square off, and that's what I kind of vision, and I put a flag of Mexico, I put the flag of Russia, OPEC symbol, and the American flag, because that's what we are. We're in a 3-way international oil war, and I don't see that changing for the next year or 2. And there's thousands of wells in the U.S. that have been drilled and fracked, and they just need to be tied in. That's called the frack log. And I think there's a ceiling in the price of oil here in the near term. And also what nobody's talking about, look at the growth of the green energies in the world, and look how much cheaper producing energy from solar and wind and run-of-river is happening. So, we're now, and on top of that, new cars are getting much more energy efficient, and all that is eating into the global demand. Plus, we're in a global slow downturn here. The Chinese economy, even though the stock market's doing well, their GDP isn't growing at the rates. And, until we get out of this glut, there's going to be more pressure on the price of oil. and I see it being in a trading range of 45 and 70 for the next couple of years.
Okay, very good. And my last question, readers can get quite a bit of insight into this answer in your book. And I read your book a couple times, but I still didn't get quite a satisfactory answer. You look at Vladimir Putin, and I want to know your opinion on him from a general standpoint, because from the underdog side, I love Putin. I'm not a fan of Obama, and seeing what Putin's done against the United States when he doesn't have the same amount of resources is incredible. But at the same time, there's rumors that he does kill people who dissent against the Kremlin. You talked about in your book going back to the 90s about the false flag attacks that took place. What is your overall view of Putin as a person?
Well, Doug Casey famously says that any politician, whether it's American or South American or Asian or Eurasian or European, you gotta be a specific type of person to get to that level and want to do it. My take on Putin is he is brilliant, he is ruthless, he is strategic, and he's actually also very loyal. If you really study it from his days with Sobchak all the way to Igor Sechin today, he's created himself with the old school group of loyalty, and he does things differently than the way we do things here in the West. But at the same time, the U.S. foreign policy kills people that don't fit into their strategy also, and that we see that it's come out years later, whether it's the Bay of Pigs or the CIA involvement in Iran. It just happens, okay? And these are the hidden wars that you see. So my opinion really doesn't matter of Putin, other than he will do what's best for Russia. And that's what the West fails to understand. If you actually look at the growth rate of Russia, everyone says, well, for 5 years, everyone keeps saying, but Marin, your thesis is wrong, because Russia it's the same fate as Japan. It's a decreasing population. That's actually not true. As of 2014, the Russian birth rate is greater than their death rate. If you look at their average age of life, it was horrible during the communist days, the alcohol abuse. It's actually improving. You look at the literacy rate, it's improving. And people say, well, yeah, that's because the price of oil, and that's, they're an oil state. Okay, well, regardless, I can argue the same fact about Alberta or Texas. And under Putin, the standard of living has increased. His literacy rate has increased. So Putin has been good for Russia. Now, our Western world media only portrays and comments people who are anti-Putin. But in Russia, this is the take the Western world doesn't get. Putin is loved. His approval ratings are high. And again, everyone in the West says, oh, that's because he controls the approval ratings. That's fine. It just seems that the West will negate any positive take of Putin within his own people. But the reality is jump on a plane, go to Moscow, and talk to the average person, and they love Putin.
All right, Marin, on that note, thanks so much for sticking around with us for 45 minutes. It was a great interview, and good luck on your discussion over there in Paris. For any of our listeners that want to get Marin's free research, the new website is KatusaResearch.com. I just subscribed while we were on the interview, and great articles up there. Thanks so much, Marin.
Thanks so much, and all the best, Colin. Take care. I heard you got a great coup. You got one of the best analysts in the street on your side.
That's right. We just brought on CJ Kim, and he's done quite a bit of work with you in the past, so it's going to be a great addition to our team.
I will tell you, that is one great guy, both intellectually, but a stand-up person. Just what a coup for you. That's all I can say.
Thanks so much.
All right, buddy. Good luck. Take care.
Think you understand the junior mining sector, and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, Troll, did you hear what's going on in Yemen, or are you too stupid?